Okay, so you can imagine how difficult psychologically this can be when the market moves in your favor, go against you, moves in your favor. So when you take a portion of your position out in profits, psychologically it's going to be much easier to handle. Then you can see rally up once again, right? Messing with your mind. And now breaking out of resistance. Will this time finally break out? Let's find out. Right, it comes back down under resistance again. Collapse back now, heading back towards the mid of the range. And then finally, we have this breakout over here, right? So I'm not going to, walk you through the different trailing stop loss mechanism that you can use. You can use moving average. You can use market structure. Maybe market structure is something that you're not familiar. Just to explain. So as you know, right, an uptrend consists of series of higher highs and higher lows like this. Okay. So what you can do is that whenever the price breaks out higher, in this case it breaks out higher, you can reference this previous swing low to set your stop loss. So until the price breaks and close below this lows, right, like this, right, breaks and close below it, then you exit the trade. If not, you can continue holding the position and to ride the trend up higher. So I think this example very clearly illustrates that trading can be simple, but it's not easy, because psychologically, as the market moves in your favor, moves against you, moves in your favor, moves against you, it will wreck your mind. It will make you take decisions, right, that is not part of your plan, right? So this is why it's very important to have a ready-made trading plan ahead of time, right? You know where exactly to enter, you know where exactly to exit, because at this point you can know that this red line is your exit. You will not exit the trade till this red level, this stop loss is hit, right? So until then, you just continue holding that position, right? Either you hit your stop loss or a new trend is born and you get to ride the trend. Does it make sense? Now, at this point in time, you might be thinking, but Rain, all this cherry pick charts, all hindsight trading, blah, blah, blah. I get it, right? So right now, I'm going to share with you a live potential trading setup, right? It has not happened yet, but I'm going to share with you my thought process, right? How I'm looking to trade this market based on the strategies and the tools and techniques I've just shared with you. Sounds good, right? So I could be right, I could be wrong, but hey, it doesn't matter. The thought process, right? The way I'm going to engage this market, this is what matters, right? Because when you do this repeatedly over time, the next 100, 500, 1,000 trades, that's how you get your positive expectancy from the markets. So again, let's have a look. This is dollar against the Indian rupee. I've reset the chart. You can see I zoom out, right? What is this market condition doing? You can see that this market is pretty much in an uptrend. Great. Next, what I'm seeing over here is a volatility contraction. So a few things first. I noticed that recently we have this area of resistance. Price made a series of higher lows, higher lows, higher lows, and then it broke out of resistance. Then it retests back this previous resistance, which could become support.